I looked at this accidentally on my phone today, and I saw this huge drop in silver. So watch out. Something's happening. Something's going to crack very soon. It's going to be scary, and it's going to last you the rest. And I think we're at gold goes parabolic, and the dollar finally dies.
Stay tuned, because what we are about to reveal could change your financial future forever. What if I told you the US dollar is heading down the same path as Germany's paper mark before it collapsed into worthlessness? Imagine waking up one day and realizing your savings can't even buy you a loaf of bread, while those holding gold and silver rewrite the rules of wealth. This isn't a theory, it's history repeating itself. And if you don't see what's coming, you're already too late.
Today we're going to talk about Weimar and how the current movement in the price of gold relative to the US dollar is very similar to the price action of the paper mark relative to the gold mark, or the paper mark, which hyperinflated in 1923, to gold, which is also the US dollar, because the US dollar was backed by gold back then at, I think, $20.60 or $21, something like that. And that was the year that you could buy a house for a $100 bill, which represented about 5 ounces of gold, and at a 15-to-1 ratio, which is where gold to silver was in Weimar, Germany, you could buy a house for about 75 ounces of silver, and that will happen again very briefly for maybe a few weeks to months at the peak of the endgame panic, which is not going to be good for society, but it's going to be very good for silver and gold stackers, who will be the base of the next division of labor that will be established thanks to them. And we'll also talk briefly about the silver drain that's really happening at the LBMA in London. It's not really a gold drain, it's a silver drain. And you can see this very simply in the chart of gold and silver stocks at the LBMA. It is silver that has been draining very fast since December. We don't have the data for February, but I'll put that out on Friday when it comes out in next week's silver report. The silver drain that's happening at the LBMA, about 20% of the float was drained out. Gold is not really being drained. The gold is actually coming from Switzerland, using London as an exchange. So why is there a backup in gold deliveries? I'll check my Substack for that. And I think we're at the final 2 steps here before gold goes parabolic and the dollar finally dies. Could I be wrong? Probably. This was sent to me by one of my subscribers at Endgame Investor on Substack by the name of Tim. He showed me a pattern that he noticed, and this is more for fun. This is not scientific. Chart analysis and chartistry and chart patterns are more of an art than a science, but I thought it was compelling enough to share with you, so I'm going to do that here. We have on the left, I think this is from Inflation in Germany or something, or one of those books, and the screenshot I think you can find on Gold Charts or Us. I don't know exactly where he got this screenshot, but I've seen it before. So he marked it in a wave pattern here, 1, 2, 3, 4. And we're going to get more specific in a second, but you can see here, the German mark in gold terms started to hyperinflate around 1918, 1919, paused. You have step 1, step 2, step 3, a little bit wavy here, step 4, and then finally the parabolic move. And here you have gold in euro terms. I think Tim is from Germany, if I'm not mistaken, so he's more familiar with gold in euro terms. This is not the same time scale, obviously, but it is the same pattern in price movement, more or less. We have here 1, 2, 3, 4. It looks pretty much the same as this 1, 2, 3, 4 pattern here. And now somebody wrote to me that it's not fair because the chart on the left is logarithmic and the chart on the right in gold and euro terms is linear. So does that really matter? Maybe, maybe not. You can decide for yourself if this is compelling for you. We'll go to the next chart to show you Tim's argument as to why it doesn't matter that one chart is logarithmic and the other is linear, because they're very similar anyway. Up here at 3,000, they're the same scale. But here you have the linear chart of gold, the price since 1989, and we're all familiar with this chart. You can see here 7 steps: black for up, red for down. You have step 1 up, gold here until 2011, step 2 down, step 3 this is the 2016 baby bull bump here from about 2015 to July 2016, if I remember correctly. And then you had another B-wave decline over here at 4 in the red, and then 5, another jump, 6, another decline, and finally 7, that's where we are now, approaching $3,000. So you can see here that the logarithmic and the linear charts are very, very similar. If we look at a chart of only the paper mark expressed in gold terms here, we have the same up and down pattern here, 1, 2, 3, 4, 5, 6, 7, 8. and this is the 9, this is 9, this is really the parabolic move when the hyperinflation moved from about, what was it, 9,000 at 8 to about 1 trillion at 9 in the space of maybe 5 or 6 months. That was the hyperinflation. Now, if we go back to here, we can see 7, and for the last few weeks, we've been in a little bit of a lull in the price action, so perhaps this is the final little tiny pullback that we saw here in Weimar, Germany in early 1923, around maybe April 1923, I don't know exactly, but following that, we had the parabolic move, and any bank hiccup, anything in the plumbing, any little misstep in the plumbing system in the banks could cause a massive monetary earthquake, which could lead to the money printing round that will ultimately cause move number 9. Whether that's imminent or it's a few months away, I don't know for sure, but you can look at these charts yourself, rewind the video. Rewind, there's no winding. Just go to the timestamps and analyze these charts for yourself to decide if this is compelling enough for you to believe that we are right on the precipice. I've always acted as if we always are, and I'm always prepared for it not to be, but you should always be prepared because one day we will be at the precipice, and the next day you won't be able to buy any gold or silver with your paper money. Finally, I looked at this accidentally on my phone today, and I saw this huge drop in silver. It's about 746 million ounces now. This is an all-time low for silver stocks at the LBMA. You can see the gold stocks here. They've gone a little bit down over the past 3 months, but not much. This is current to January 2025. The February numbers will be out on Friday, and I will report them here in that week's silver report, in this week's silver report. But we'll get to that on Friday. You can see here that despite what the mainstream financial media is reporting, and a lot of it is being copied and reported on by our type of media. And not saying that it's a lie, gold is being drained from LBMA, and there are backup times in physical deliveries, but the real story appears to be in silver. This candle subtracted by this candle is the biggest monthly silver drain ever. It's about 70 million ounces of silver. They are headed to New York from here. As you see in 2020, when there was a huge surge of gold into New York, it wasn't physically coming from London because the gold supplies in London in the LBMA in 2020 were also rising in 2020 to all-time highs. They were both coming mainly from Switzerland and other gold-producing countries, gold bullion-producing countries. And so while the mainstream financial news media, including a lot of our own channels and our own people, are focused on the gold drain into New York, supposedly from London, the real action is in silver bullion. It is being drained physically from the LBMA. And if we are to take into account all of the SLV-owned bars that are in the LBMA, which is most of them, and subtract that from the total silver that is in the float at the LBMA, then last month it was about a 20% drain of the physical silver float from London to New York. The story appears to be in silver, at least when it comes to physical drainage. So watch out. Something's happening. Something's going to crack very soon. It's going to be fun. It's going to be scary. And it's going to last you the rest.
Gold and silver aren't just investments. They're lifelines in a system that's cracking under its own weight. History is repeating, and those who see the writing on the wall will come out on top. Stack wisely. Stay informed. And as always, protect your wealth before it's too late.